What's up YouTube, it's Matthew here. Welcome back to my channel. In today's video, we're going to talk about 12 different ways to start investing in real estate. We're going to cover different strategies of all different levels. So whether you have little to no money or if you have a little bit more capital to play with, we have a way that you can start investing in real estate today. The 12 different strategies covers strategies that you all are probably familiar with and some that you're not so familiar with, but you would like to try and actually become successful in it. So these 12 different strategies I read off of an article online. So all credit goes to the authors of this online publication. And I felt like it would be good to put it in a video format for YouTube. So I'll put the link down below if you all are interested in checking out this article. All right, so let's head right into the 12 different strategies. So the first strategy I want to talk about is wholesaling. So wholesaling is obviously the bulk of my content here on this channel. In wholesaling, you're basically a middleman, a middlewoman, a person in between the seller and the buyer. And so with wholesaling, you put a property under contract between you and the seller and you assigned it to a cash buyer for a higher price. For example, if you put a property under contract for $100,000, you find an investor who wants to flip the property and you sell it to them for $110,000, you get $10,000. So one of the pros with wholesaling is that there's little to no money just starting out, right? You don't need to buy a house. You just need to put a property under contract. And another pro with wholesaling is that you get to learn real estate as a whole. So whether you want to advance into other things into real estate, wholesaling is a great starting point for any entrepreneur looking to start investing in real estate. Now, some of the cons with wholesaling real estate is that you need to find a cash buyer. A lot of beginners struggle with this because they don't know their numbers. You have to be very familiar with property values, repair costs, and your max allowable offer on a property. So you need a cash buyer, you need an investor in order to get the deal done and close the deal. Another con with wholesaling is that it's really competitive. I know a lot of people haven't heard of it, but the people who do know about it, they know about it, and they know a lot of people are trying to get the same house as you are. So the next strategy I want to talk about is a little bit different. It's called a live-in flip. So with a live-in flip, you buy a property. Let's say you're just looking for a property and you get a loan to live in a property that's livable, but you still need to put some money into some updates, some repairs, and just cosmetic updates that are needed on the property. So with this strategy, you live in it and you try to live in it for at least 2 years, because with those 2 years, you avoid capital gains with it. So for example, if you live in a property and you flip it, you fix it up over time, you get to sell it and make that money afterwards. So some of the pros with that is that obviously you don't have so much expenses, because a lot of times you're going to be doing the work yourself and you'll have the work right there at your ease to complete in a relatively short time. So for example, if you're living in a property, you can get it done in 6 months and then live in a nice updated property for another year and a half. But some of the cons is that you have the work right there, right? You're always in front of work. You can never leave work because you notice the paint is chipping here or this or that. And so that's a con with live-in flips. And another thing is that you don't even know if you're actually going to get a higher price for this live-in flip, because property values might go down, the market might turn around, and different things like that. So the next strategy, the third strategy I want to talk about, is a live-in, then rent the property. So it's similar to live and flip, but instead of flipping it, you rent it out. So same thing, you get a property, might need a little bit of updating, you live in it, and then you move into a better house. And when you move, you still keep that same house, but you just rent it out. So it's similar to house hacking, but I would say the difference is you're not living in it while you're renting it out. This has a whole host of options because you can just basically do that every 2 years. Just buy another house and rent out your previous house. And so you can start growing a portfolio in a relatively short time and live in really nice properties. So cons with this strategy, similar to the live and flip, is that you don't know that the property values will increase. And also you have to find a really good rental area or this won't work. So if you buy a $200,000 house, but no one is renting around that area, mostly people just buy their houses there, then it won't work out. So the next strategy I want to talk about is for, I guess, people who have a little bit more money, or even people who don't have that much money. It's called hard money lending. So for example, let's say you have a 401k, you worked a lot of years in your life and you have like this amount of money to invest in. So what you can do, you can lend it out to real estate investors, people who like to flip properties, hold rentals, or even wholesale, and you can make money off of your return that way. So obviously that's a great benefit to it. Like some of the pros is that you get interest payments, it's more of a passive investment strategy, and you just get to have a higher interest rate other than just keeping your money in the bank. So some cons are that people can default on their loan with you. You can have people who are shady, people who misuse your money and never pay you again. And there's less regulation and strictness with it because it's not like someone is after the bank or gets a loan with bank. So it's very important to have collateral against loaning out money to someone. Make sure that the house they're investing in is actually a good property, a property that even if you sell it, you can be able to get your money back. All right, so this next strategy the article talked about is a strategy they label as trade up. So this trade up, they basically talked about the 1031 exchange. So for example, if you flip a property, you buy the property for $100,000, you put some money into it, and you sell it for $200,000. Let's say your profit is $50,000. Instead of just cashing that $50,000 check and paying taxes on it, you do a 1031 exchange where you use that $50,000 and you put it into your next rental or your next flip property. And so with that, a con is that you get to avoid paying taxes on your profit and you get to just level up. So your next deal, instead of buying a house for $100,000, maybe you get a house for $200,000. And so you can keep on leveling up and avoid paying taxes. Some cons with this is that you can never realize that gain, really, right? I mean, you can put it into a rental property and get some rental income, but let's say you make $100,000 and you just put it right into a property. You don't get to enjoy that money or use it in different ways. Another thing with the 1031 exchange that's a slight con is that, it's with the government, so they have very strict regulation and laws regarding it. So you have to be truly careful about how you navigate that and how you proceed to work that out. The next strategy I'm going to talk about is turnkey operations, so turnkey properties. There's just basically properties that are fixed, they're updated, you don't have to do anything to the property. All you need is a renter to pay you monthly rent to rent out the property. And sometimes you can buy these properties already with the tenants already in them, paying you on a monthly basis. So some pros are obviously it's more passive. You don't have to necessarily even live around this property. And a lot of times, since the property's updated and everything, you don't have to worry about repairs or updates in a few years. With this strategy, a con is that you have to have a good amount of capital, right? Because usually these properties are priced at market value. And so you're not getting much of a discount if you're buying the property turnkey in a turnkey condition, right? So make sure you have the amount of capital in order to put a down payment on so you can get this rental property. So the next strategy I want to talk about is BRRRR. So the BRRRR strategy stands for buy, renovate, rent, refinance, repeat. So basically it's a way that you can take discounted properties, take like a hard money loan or just a loan in general, buy a property, fix it up. And then what you can do after you fix it up, you can rent it out to a tenant since it's updated now. And then you have to refinance. You do a cash out refinance. So you get cash out of the property because the value has increased because now you have renters in there and you fixed up the property. So now the bank is all like, this property is worth more, and you can take that cash out, that equity out, and then you just repeat that process with the same amount of cash with that. So with this strategy, there are a good amount of pros. So some of the pros with this strategy is that you get to invest in multiple properties at the same time, and you get to use the advantage of leverage, right? Because you don't have to put a lot of money down, because first of all, you're buying the property with a loan that you probably don't have to put much money down if you're using a hard money loan. And then number two, you get to take out cash every time you refinance the property. And so this can be done multiple times a year in order to cash flow and get rental properties. And another pro is that the properties appreciate in value over years. And plus with that, remember, you hardly have to put a down payment. Maybe you pay for the repairs, but that's about it. It's not like the turnkey rental property where you have to put 20% down and then maybe an update comes in 4 or 5 years that you have to pay for. So some cons with that is that you have to deal with ugly houses. So you have to deal with repairs and updates and just hiring contractors and all of that. Another con is that you might be over leveraged. Let's say you take on 5 of these properties at the same time. That's 5 different loans. Let's say they all cost $100,000. That's $500,000 worth of loans and plus repairs that you need to do on the property. Let's say the property never appreciates and you can't ever take money out of the property to pay back your lender or to pay back the repairs that you paid for on those properties. So the next strategy I want to talk about is house hacking. So house hacking is a great strategy, especially for beginner real estate investors or just anyone looking for a house in their 20s or even 30s. Let's say you graduated college and you're looking for a house. Instead of considering just your typical single family house, what you can consider is a multi-family property. So you can look for a property that has 2 units or up to 4 units that you can house hack with. And with up to 4 units, you can put as little as 3 to 5% down on that property. Some pros with house hacking is that you get to invest in real estate while just living at your own primary residency. So for example, if you bought a quadplex, a 4-unit property, you live in one of the units and you rent out the other 3 units. And with the other 3, not only do they pay off your mortgage where you live rent-free, mortgage-free, you can also cash flow, like make money on top of that to pay for other expenses like repairs or other things like that. So some of the cons with this strategy is that this strategy is extremely hard to find, right? It's extremely hard to find a quadplex that you can actually cash flow, where you can actually make money with. They're usually overpriced and a lot of people are going after these multifamily properties. Another con to this strategy is that you have to live essentially with your tenants, right? There's no way escaping them. You have to be with them. The next strategy I want to talk about is Airbnb. You probably used Airbnb before in the past, and essentially you get a property, you buy it, you fix it up, you put some furniture in it, make sure it looks nice and pretty for pictures on Airbnb and Instagram, and then you rent it out kind of like a hotel per night. So let's say you have a house, you can even rent out a bedroom in your house. So you can even live in your house and rent out bedrooms on Airbnb. So some pros with that is like usually the cash flow is really high. Like you can get a lot of more money as opposed to just renting out the property for a long term. But with that, some cons are that you have to pay for cleaning, you have to pay for furniture for the house, you have to replace furniture, and a lot of people are going through your property, so there is more wear and tear on the property. Another con with Airbnb is that Airbnb has some restrictions in certain cities and states. I know there were some cities here in America where some cities actually banned short-term rentals or like Airbnbs where you couldn't have them. Maybe because the neighbors complained and they didn't want like random people walking through their neighborhood. So now you have long-term buy and hold. So obviously I'm going over strategies that you all probably know. So long-term buy and hold, you buy a property, hold it forever. You probably give it to your child when you're old and you're about to die. You just hold properties. You let the property increase in value. You just collect the rent. You just do repairs and updates whenever a renter move out. So some cons is that you're dealing with tenants long term. You have to hold a property at least 5 years in order to maximize the profit on the property. So for example, the appreciation and just the cash flow in order to pay back your investment. Let's say you put down 20%. Usually you have to hold it for at least 5 years to get that 20% back. So the next strategy I want to talk about is short-term real estate investing. It sounds similar to like Airbnbs, but this is different. Listen, so short-term buy and holds are like, for example, commercial properties. I was just watching this video and they were talking about commercial buildings and buying like 54 units or like 100 units or like $50 million apartment complexes. So with that, a lot of people that enter into those deals, they don't keep it long-term, right? They keep it 3 to 5 years so they can quickly increase the rent just by a little bit bit, do some repairs and updates, and then that increases the cap rate on the property, which in turn, more eyeballs are on that property, more investors want that property. And within 3 to 5 years, they sell that property and make more money. For example, they buy a property $50 million, they sell it for $80 million, and they invest, let's say, $5 million into the property. But there's a bunch of like other investors into it, but you can make a couple $1,000,000 just by doing that. It's crazy. The last strategy I want to talk about, the 12th strategy, is just your classic fix and flip. We all know this. It's been glamorized on HGTV. You buy a property that's discounted, that needs some repairs, you fix it up, make it look pretty and everything, and you put it back on the market and you get some cash. The pro with that is that you learn the ins and outs of real estate. You learn about repairs, you learn about dealing with contractors, you learn about property values and all that. And you get to make a lot of money doing fix and flips if you know your numbers. Some cons with that is that you have to deal with contractors. You have to deal with people, probably go through a couple contractors and workers until you have your core people. But once you have your core, man, fix and flip, you can just run it like a machine. All right, you all, I hope you all enjoyed this video. I went quickly because there were 12 different strategies that you all could use right now to start investing in real estate. So if you all enjoyed this video, be sure to like, subscribe, comment down below if you all have any other questions, and I'll talk to you all later. Peace.